It just snapped. What we are witnessing right now is not a normal market move, not a temporary spike, and the system not another headline that will fade away in a few days. Is now showing visible the silver
fractures.
Supply has officially broken.
This didn't happen overnight.
The system that depended on cheap, seeing today is now the result of years of pressure building silently beneath overnight. The surface. The snap you for decades seeing today, silver has been the result of years of pressure building silently beneath the surface. Something abundant, for decades, replaceable, silver has been treated as an afterthought. Paper contracts multiplied, metal, leverage, something abundant, replaceable, and the illusion of endless supply was paper contracts multiplied. Leverage, physical silver does not multiply like paper and the illusion of endless supply mines do not respond instantly to higher prices. But physical silver does not multiply like paper claims do not magically refill. Mines do not respond instantly to higher prices. The core problem the system is now facing. In inventories, what changed strained not demand magically refill. Demand has always been the core problem the system is now facing. Industrial use, solar panels, changed is electric vehicles, medical applications, has always been there. Military technology, industrial use, electronics, solar panels, steadily consuming silver at medical applications. Military technology, at the same time, electronics, investment demand has steadily consuming silver. Slowly realized that currencies are at the same time. Investment demand has surged. The difference now is that slowly realized that currencies, the extra inventory that once absorbed shocks, no longer exists. The difference now is that the dealers begin freezing sales. The extra inventory that once absorbed shocks no longer exists. Mints quietly. Dealers begin freezing sales, and when vault reports start showing unexplained declines, that's not coincidentally suspend production. That's a supply chain. And when vault reports start showing unexplained declines, paper markets can quote any price they want. That's a supply chain. Physical reality snapping under real-world pressure. Those limits have now been reached. Paper markets can quote any price has always relied on physical reality has limits. Confidence, those contracts now been settled. The silver market has always relied on confidence if needed. Confidence that price signals are honest. Confidence that confidence erodes, the market changes character entirely. Confidence that price signals are honest. We're now entering a phase where price that confidence reflects availability, the market changes character entirely. When desperation doesn't move in a straight line, no longer reflects availability. Institutions are in a particularly dangerous position. Desperation doesn't move in a straight line. Structurally short silver, banks and large either directly or through derivatives tied to industrial users. Many of them are structurally short silver. This worked when physical supply was plentiful through derivatives tied to industrial users. It stops working the moment physical metal disappears. This worked when physical supply was plentiful. At that point, investors covering positions becomes a race. It stops working the moment physical metal disappears. What you're seeing in price volatility is not covering positions becomes a race, not a strategy failing. So what you're seeing in price volatility is not manipulation failing, but supply control failing. Every attempt to push price down becomes an opportunity for physical buyers to drain even more metal from every attempt to push price down becomes an opportunity for physical buyers to drain even more metal. The global nature of this breakdown is what makes it so dangerous. Accelerates the problem. Silver is not consumed evenly across the world. The global nature of this breakdown is what makes financial structures around paper promises. Silver is not consumed evenly across the world. Physical accumulation. The West built financial structures around paper arbitrage gaps widen between regions. Focused on physical flows toward the highest industrial dominance, not the highest. As arbitrage gaps widen between regions, why human metal flows toward the highest trade at radically different levels depending on where you look and how you time when you're trying to acquire silver trade at radically different levels depending on coins or where you look and how you time manufacturers realizing they may not be able to secure future supply coins or bars. When a factory can't guarantee manufacturers realizing they may not be able to secure future supply. When a factory can't guarantee access to critical stockpiles, it doesn't wait for prices to stabilize. Behavior removes even more metal from the market, long-term tightening supply further and accelerating the feedback loop. Governments are paying attention to more metal, even if they're not saying tightening supply further and accelerating the feedback. No longer just a commodity. Governments are paying attention to material, even if they're not saying transitions. Defense silver is no longer just a commodity. Infrastructure and emerging materials all depend on energy transitions. When a material becomes strategic, communications markets quietly give way to policy decisions. All depend on export controls. When a material becomes strategic and restricted access quietly give way to policy decisions. The most dangerous misconception right now is believing this can be fixed. And restricted access often new mines take years. The most dangerous misconception right now is believing declining ore grades, rising energy costs, new mines take years to bring regulatory pressure. Existing mines face declining ore grades, rising energy bridge costs, structural deficit shortages, and regulatory pressure. The math simply doesn't work. Recycling helps, but snap cannot bridge a structural deficit of this magnitude. The story that silver is abundant is no longer believable. Was not just inventories are vanishing in real time. The story that price reflects reality is no longer believable when inventories are vanishing in real time. The story that price reflects reality are stable collapses when emergency by metal rule changes and quiet interventions. The story that markets are stable collapses. This is how trust erodes. Emergency meetings, not in one dramatic moment, but quiet through a series of small failures that suddenly. This is how trust erodes. Not in one dramatic delivery. Through a series of small failures that suddenly unexplained inventory crisis, one price smash, one delayed delivery, attract sellers, one frozen dealer. Each event on its own can be ignored. Inventory draw. Together they form a pattern that cannot be dismissed. Sellers. We've seen this. Each event on its own can be ignored. Together they form a pattern that cannot be dismissed. Then comes volatility. We've seen this. Then comes intervention, just not in silver. Then comes repricing. It starts with denial. The only question is the volatility, magnitude. Then comes intervention. Speed is then comes repricing. Silver's role as a monetary metal adds another layer of complexity. And speed has always been the more volatile cousin to gold. Silver's role as a monetary metal adds another layer of complexity. When confidence breaks, has always been the more volatile cousin to gold. What looks impossible at one price level suddenly becomes inevitable at the next. Silver tends to overshoot. The phrase price discovery gets thrown around a lot, but true price discovery only happens when sellers disappear. The phrase price discovery gets thrown around refuses to show up. True price discovery only happens higher, not by speculation, but by necessity. The marginal unit of supply. We are closer to that moment than most people realize. Price is forced higher for everyday speculation, but this matters because silver. We are closer to that moment than most people realize. About the metal itself. For everyday people, it's about what happens when real assets begin to break free from financial control. It's not just about the metal itself. It's about what happens when. It's about what happens when real assets. It's about what happens when the gap from financial reality and representation. It's about what happens when paper too wide to ignore. It's about what happens when the gap between reality and representation all rely on one thing to ignore: trust. Currency debasement, debt expansion, and financialization all rely on one thing. When a small market like silver breaks, trust exposes stress fractures much larger as it did yesterday. That's why silver small market like silver breaks before they become stress fractures in much larger structures. Right now, that's why silver moves are often dismissed right before they become impossible to ignore. But panic is not fully set in. Right now, we are in the early phase of recognition. Behavior changes fast. Awareness is spreading. Stop asking whether panic is not fully set in. Start asking whether it will be available at all. Changes fast. That psychological shift. Stop asking whether something is what defines a true supply break. Asking whether it will be available straight up forever. There will be pullbacks. Shakeouts is what defines a true supply break. Test conviction. This doesn't mean straight up forever. But the underlying problem there will be pullbacks. Go away. Shakeouts and broken supply chains don't heal because of volatility. But the underlying problem does not investment and structural broken supply chains don't heal because of volatility. The snap you're seeing is the sound of a system hitting its physical change. The silver market can no longer pretend that snap you're seeing is the sound of a system hitting its physical limit. It can no longer hide shortages behind accounting tricks. The silver market can no longer pretend that paper and metal are the same thing. It can no longer hide shortages behind accounting tricks. We are now entering a phase where actions matter more than narratives, where possession matters more than promises. We are now entering a phase where actions matter more than narratives, where possession matters more than promises. Silver didn't suddenly become rare. Where reality reasserts itself regardless of being ignored. And once that happens, silver didn't suddenly become rare. It simply stopped being ignored. And once that happens, there is no easy reset.